Welcome back, value investors. In this video, I'm going to be taking a look at a real estate investment trust by the name of Vici. And they own casino properties and hospitality properties across the United States. They're doing quite well. Travel is really up. Las Vegas is doing really well. I wanted to take a look at this real estate investment trust to see if it's a good investment, whether it's a buy or a sell. I'll go through my analysis and I'll share that with you, along with my conclusion as to whether I'm going to buy or sell Vici. Do me a favor and like my video and subscribe to my channel. And please leave a comment. I'm going to take Vici through my process. It involves 3 key areas and then a decision whether I'm going to buy, hold, or sell. First area is all about the company. Is this the type of business I want to own? Do I want to be a part owner in the actual business? Do I like the industry? Do I like management team? Is the payout ratio on their dividend less than 80% of their available funds from operations? Do I get a discount on the stock? Based on the answers to those questions, I will buy, hold, or sell Vici. Vici has grown over the years by acquiring properties. In some cases, some of these properties are very well known, like Caesar's Palace or the Venetian in Las Vegas. These are just marquee, really trophy properties. They also own smaller properties across the United States. For example, in Detroit, they own Greektown, and in Cincinnati, they own the Hard Rock. So it's nice that they have a really good base in Las Vegas, but they also have properties across the country. So tourism is strong in Las Vegas in 2023. They've done really well. And they just had a Formula One race here in November. So overall, the economy in Las Vegas has really made a strong comeback. And I think they're breaking records. And all that's good news for Vici. The real estate sector has done really well. In fact, over the last month, it's done better than all other sectors, including technology. And I wanted to find more companies in the real estate sector to invest in because it's really bouncing back. For the rest of the year, it hasn't done all that great. So it has some catching up to do. And I think there's some room for the real estate industry to really recover. Drilling into the real estate sector, we have a variety of industries. And those industries go from hotel REITs to retail REITs, office, and so forth. The number one performing REIT over the last 3 months is hotels and resorts. So it's been doing really well over the last 3 months, up 17%. So again, I'm looking for more investments in the area where these companies are going up in value. Additionally, Vici pays a dividend. So it's a really nice combination of value that I'm getting out of a REIT. Vici has been producing really good earnings over the last, I would say, 12 to 16 months, really nice performance. And it looks like they're going to have really good, steady, high earnings per share over the next 5 quarters. I'm going to take the next 4 quarters in my valuation that you'll see in a few minutes. And that'll be my starting point of earnings per share. And I'm going to have a PE that's higher than what they're currently trading at. Right now, they're trading at almost 12 times forward earnings. I think they deserve a higher, a PE, more like 18. So I'm going to use 18 along with the earnings per share that I expect over the next 4 quarters. REITs need a lot of debt in order so they could buy all these properties and then operate them. And here is the schedule of the bonds that they have to pay over the next 30 years or so. And in 24, they're going to have to pay about $1.05 billion. But it's good to know that they produce over $2 billion of free cash flow, and they already have $511 million on the balance sheet. So that shouldn't be any worry. They'll be able to handle that and still keep a really solid cash position. In 25, they have a higher payment, probably about $2 billion. So it'll be important for them to really bank a lot of that free cash flow so they can pay their debt. But overall, I'm not seeing any overwhelming debt payments over the next 5 years, which is good to know. I believe that Vici is discounted by 31%. And I get that by looking at valuing their dividend and valuing their earnings per share that I expect out of the company. First, the dividend, they pay a good dividend, $1.66 per share. And I'm going to use this valuation technique here, this method, to get a value of the stock price. And I get a value of $41.50. The current stock price is $31.34. So there's actually a nice 32% discount if you compare the dividend valuation versus the current stock price. It's good to know that they pay out 78% of available funds from operations. So that's below the 80% that I have as a criteria to invest. Earnings per share, I showed you earnings per share for the next 4 quarters is going to be $2.65. I'm going to use a PE of 18 and grow those earnings by 4%. I get an intrinsic value of $40.68 as a starting stock price for the company using earnings per share. but the stock price is traded at $31.34. So it provides a 30% discount. If we look at the value of the earnings that I expect in the future, when I blend the two, I get about a 31% discount on the company. So it's a nice discount. REITs don't tend to move a whole lot, but they pay a nice dividend. Looking at where the stock's been, it's been mostly going down for a good part of the year. And part of it is those high interest rates. It really worried investors that a company that needed a lot of debt, like VC needs debt, is going to be at high risk. But as interest rates began to fall, you saw the stock price really rally. For the year, it's pretty much flat. It's down about 1.64%. But if you look at from October 30th, which is this point here, it's up almost 15%. So it's just been rallying over the last couple of months. They pay a dividend of 5.3%. So it's a really nice stock for my income portfolio where I have mainly dividend paying stocks. So should I buy VC stock or not buy VC stock? Let's take a look. So first, I think the company is really good. I like that they really focus on casino-like properties. They have a lot of expertise there. They know what they're looking for. They know how to operate these properties very well. Their payout ratio is less than 80%. And they have a nice discount available on VC. So I'm going to be buying shares of VC. The stock has been going up. So I'm going to be buying shares at the current stock price, especially on pullbacks, and build up a position of VC. I have two other REITs in my portfolio, my income portfolio. This is the newest addition, and I'll be adding shares over time. Hey, thanks for watching the video. I hope you found it interesting, and I'd love to hear your comments on VC. Please add a comment. And please like my video and subscribe to my channel. I'd really appreciate that. Thanks for watching. Happy holidays.